Noah Holdings, ticker NOAH, they just reported. And it's a massive bottom line beat, but a top line miss. And the stock is actually trading slightly up on the news. But looking at the numbers, net revenue dropped 7.4% year over year, down to 632.9 million RMB. That is about 88.9 million bucks. But like net income, it surged 62.6% to 218.5 million RMB, or $30.7 million.
Yeah, and diluted EPS per ADS hit 44 cents, with non-JAP coming in at 46 cents. It is a really fascinating divergence for this deep dive.
Right. I mean, how does a wealth manager shrink its top line but massively balloon its bottom line? It's like, I don't know, a retailer selling less inventory but somehow posting record profits.
Well, the answer is just below the operating line. If you look at their segment breakdown, operating margins actually fell this quarter. They dropped from 35.2% down to 27.2%.
So their core business wasn't actually more profitable.
Exactly. But net margins spiked to 34.6% because of basically an accounting adjustment. Noah recorded an increased fair value on investments they hold in affiliate companies.
Wait, let's pause there for a second because that sounds like a magic trick. They didn't actually, bring in a mountain of cash from new clients to get that 62% net income bump.
No, not at all. They basically just looked at affiliates they already own a piece of, saw they're worth more on paper now, and recorded that increase as income.
Oh, wow.
Yeah, it's an unrealized non-operating paper gain. The actual cash-generating core business, specifically their overseas operations, was a huge drag on the top line. Overseas wealth management dropped 22.7% because they saw way fewer insurance referrals.
Right, which totally makes sense when you consider the macro environment. Those big offshore insurance products usually carry like massive one-time commissions.
Yeah, and when the economy tightens, high net worth clients put a pause on those big ticket purchases. Plus, overseas asset management fell 20.8%, mostly due to lower performance-based income.
Because if those offshore private equity funds aren't hitting their hurdle rates, that minimum return they need before Noah takes a cut, or if they aren't selling off companies, that revenue just evaporates.
Spot on. So the offshore commission engine is sputtering. But if you look under the hood, underlying client engagement is actually flashing green. It shows us exactly where the smart money is moving right now.
Yeah.
Active transacting clients jumped to 35.5% year over year.
And transaction value followed suit, right? It rose 19.1% to 17 billion RMB. And that was almost completely fueled by a massive, 66.9% spike in private secondary products.
Yep. Meanwhile, total assets under management held relatively stable at 143.5 billion RMB.
Okay, I have to stop and push back on this, though. If you're listening to this trying to figure out where the market is heading, you have to wonder, is this sudden rotation into private secondaries a permanent structural shift by these billionaires? Or are they just, temporarily chasing yield because the primary markets are weird right now?
It's highly opportunistic. Private secondary products are funds where investors buy existing stakes in private equity deals, usually at a steep discount. You see volume spike here when primary markets are locked up.
Or when early investors desperately need cash and are willing to sell cheap.
Exactly. So for Noah's clients, this 67% jump suggests a tactical rotation. They're hunting for discounted second-hand assets rather than locking up fresh capital for 10 years in brand new funds.
Right.
So it likely isn't a durable multi-year structural shift.
So if traditional offshore revenue is drying up and they are relying on clients hunting for second-hand discounts, how is management actually fixing the core business moving forward? I know Chairwoman Jingbo Wang confirmed they canceled 6.7 million treasury shares.
Which is a concrete positive for boosting earnings per share.
Yeah.
But operationally, she also highlighted that they're obtaining a U.S. broker-dealer license and integrating AI to acquire clients and reduce manual processes.
We definitely have to look at that AI commentary with a healthy dose of skepticism, though. I mean, automating back-office manual processes absolutely lowers expenses over time. But wealth management is inherently a high-touch, relationship-driven business.
Oh, 100%. You don't close a $10 million private equity allocation using a chatbot.
Exactly. AI really is just the magic word in every earnings call right now to keep investors happy.
Right. The near-term impact of AI on their bottom line is probably minimal compared to broader market movements.
Yeah.
Which makes the U.S. broker-dealer license you mentioned earlier much more impactful.
Yeah.
Noah is officially setting up shop stateside to chase fresh capital.
Which leaves you with a really critical final thread to pull. As NOAA expands its global footprint into the U.S., how will shifting global interest rates impact the delicate balance between their onshore and offshore assets moving forward?
Definitely a massive question to keep an eye on.
Make sure you follow the show for daily, no-nonsense earnings coverage.